Is trading stock options easy? Well, in my opinion, it is easy, but it really depends on you. It depends on the strategies that you are trying to apply. And I hope that this video is going to help you to determine whether this is something that you want to pursue if you are not trading options just yet. So on the screen, you can see my closed trades for this week, and I wanted to call out 4 of them because they are a little bit different. There are 4 different strategies in here. All of these trades I closed this week, and as you can see, the profits were quite healthy for all of them. So let's take a look at Hood. That was a long call. I opened the trade on the 22nd of December originally, and I closed it on the 17th. So if we take a look at Hood, the daily chart of Hood, we can see that on the 22nd of December, the price was around the $8 mark, and now it's gone up to $9.52. I was quite confident with this trade because the $8 mark for Hood, I believe, is very, very low. So that's why I was able to close this. And when I say it's a long option, a long call option, I meant it's a leap, which means the call option expired in 2025, so I had plenty of time to be right with this trade. Now the next one is MU. With this one, I sold a strangle on the 4th of January and I was able to close it 2 weeks later. So if we take a look at what I did, MU, I sold the 45.6250. So the 45 is the put option and the 62.5 is my call option. Over here on the screenshot, you can see the lines indicating my strike prices, and I collected $1.30 premium for it, and I closed it 2 weeks later at $1.15. So not a huge profit, but it's about frequency. The more frequently you trade options and the more frequently you collect some premium and book some profits, the more money you're going to generate. So if we jump over to the daily chart of MU, then we can see that over the last week and a half or so since I opened this trade, there wasn't much movement and the volatility just kept going down, and that allowed me to close this for a nice profit. The third one that I wanted to call out was my AA trade, which is Arcoa, and it was once again a short strangle, so I sold a put option and a call option. But what was different between this and my MU trade is that this was an earnings play. So I placed it on the 18th and I closed it within 24 hours, and that's why my annualized profit is very, very high. So if we jump over to my documentation, you can see that at the time of placing this trade, the price was at 53.45, and I sold the 45 put option and the 65 call option, and I collected $1.20 credit. So the lines once again indicate my positions, so a fair bit away from the price at the time of placing the trade. And if we jump over to the daily chart, then we can see that after the earnings, the price dropped, but it did not matter to me because it didn't drop too much and I was able to close both of my positions. So when you sell a strangle, normally one of your positions is going to be a loser and the other one will be a winner. But the key in here is that the overall performance of your 2 positions is a positive. So the loss on my $45 put option was less than my win on my $65 call option. And that's why I was able to book a profit. Another thing to keep in mind is that after earnings, the volatility always drops, and you can take advantage of that volatility collapse. When the volatility is higher, then option prices are higher. Volatility collapses, then option prices collapse too. The fourth trade that I wanted to call out was KMX. It was a short put. Once again, I was able to close it within 24 hours. And if we jump over to the daily chart, then we can see that when I placed this trade, it was after it dropped from about 68 all the way down to 61. So when I see a big price drop, then I like to sell put option And when I see a big price jump, then I like to sell call options against the given stock. So in this instance, I was quite lucky that the bounce that I expected came within 24 hours, and I was able to close this deal with a nice profit. So as you can see, I closed a few of my positions this week, and I just called out 4 different strategies, and they're relatively straightforward. There's no real magic behind it. There's no real science behind it. The platform is helping you to make the right decisions. So I am quite confident that you can do this as well. But I also wanted to show you that not every single trade works out really well. So I sold a Intel put option back in March, at the end of March, when the price was at 51.43, and I collected a $1.19 credit. I did not believe that the price is going to drop as much as it did. So when I sold this option, that was back in March, at the end of March, all the way over here, and since then the price dropped all the way down to 24. So that's a huge drop, and my position obviously suffered because of that. I am currently sitting at the 42.5 mark. So if I wanted to close this position now, it would be a big loser. I would have to book about $12 loss, but I'm not going to do that because with options, you can keep rolling your positions and eventually it's going to turn out good. So let's talk about my trade number 227, which was my today's trade. And once again, I traded Wayfair. And why did I do that? Because just like in the case of my KMX trade, when the price dropped, I sold the put option. In this instance, the price jumped, so I sold the call option. It went from about 38 all the way to 47. So I sold the call option at $60 with a $60 strike price, and I collected a $1.26 premium. And what I'm hoping for is that the price is going to stabilize and it will come back down a little bit, and I'll be able to close it very quickly once again. So that wraps up my trade number 227. I hope you find it useful. I hope you find it beneficial. And if you're not trading options yet, then I hope that this will help you to make the decision that it is not a rocket science. You can do it. So if you like this video, please hit the like button, subscribe to my channel, and spread the word. Thank you for watching.